Sound check. Can you hear it okay now? Okay. All right. Hi, everybody. My name is John Carter, and I am here to talk to you about specific methodologies to trade a small account. And more specifically, if you've got a small account, basically the idea is that you want to get a big account. So there's specific strategies to grow a small account quickly, utilizing things like options. And we're just going to dive in. I'm going to show you how to do it. All right. This will be fun. Okay. So first of all, welcome everybody. One of the things I love about trading is I spent about 5 years touring the world with the Chicago Mercantile Exchange. And we went all over China, all over India, all over Europe. And I got to talk to traders all over the world. And what was great about this is even though that everybody has different belief systems, different religions, different mindsets, different philosophies, when it came to trading, everybody converged and came together because everybody, when it comes to trading, kind of has the same goals and ideals. And trading to me and to a lot of the people I meet represents freedom. If you can develop a skill that can generate income from the market, you can do that from anywhere. You don't need a boss and you can work when you want, but you've got to learn the skill and how to do it. And it is a skill. All right. This isn't about insider trading. This isn't about understanding what's going on in the world or watching CNBC. It is a specific skill set. And once you understand how to do it, you can do it from anywhere. All right. So let's dive right into this. So why small accounts? What are we talking about specifically? Well, generally what I found is with traders is that you've either starting out and you do have a small account, right? And if you've got a small account, the main goal there is to grow it into a big account. Okay, so why do you want to grow it into a big account? So if you've got a big account, so let's say a small account is $10,000, okay, or whatever amount you have, it could be $500. And then let's say a big account is maybe $300,000, all right, and that's going to be different for everyone. So the goal here is that if you can generate, say, 5% to 10% return a month, okay, with trading options, that's very viable. You can actually create a decent income with a larger account. If you've got a smaller account, you can still generate, say, 5% a month using conservative strategies, but that's not a lot to live on, right? That's $500. And so if you've got a smaller account, our goal initially is let's get that to 6 figures, all right? And then once you get to 6 figures, you can actually start employing different strategies for more reliable income, okay? So what I wanted to show you is that this was an account I had set up. I want to show you just the traits of a small account. It started off right at $5,000. And then you can see this is the P&L curve. Obviously, not every trade is going to work, right? But you can see over here over the course of about 3 months, it went from $5,000 to $25,000. And while it's not straight up, the idea is that you don't want to give back too many gains. All right. So if it pulls back a little bit, you cut it loose, reestablish new positions. You make a new equity high. If it pulls back too much, you cut it loose, reestablish new positions, new equity high. Okay. Now, what are some examples of some trades that you can do like this? Well, 2 examples. One, this is beyond meat. Okay. Now, in a smaller account, position sizing is critical. So on a small account, maybe you'll do 2 contracts. Maybe you'll do 10. Okay. Obviously, in a larger account, you'll do like 49. But here you can see that the options more than doubled. All right. And so this turned into some really solid profits. And again, in a small account, you might just be doing 2 contracts, but you get the idea of what I'm talking about here. Instead of buying the stock, okay, at $84, I'm using options as leverage. Okay. So 2 options is like buying 200 shares of stock and you benefit from that price increase. All right. So that can actually, you can utilize that leverage to grow an account quickly. Now, one question that comes up is, well, yeah, it's easy to make money in an up market, but what about a down market? I love down markets. In down markets, you make more money faster if you know how to position for them. So why is that? Because in an up market, you may go up for 4 to 6 weeks, but then all of a sudden you get a quote unquote out of the blue down market, right? And I'm going to show you how to find these out of the blue down markets. And then it'll give up all those gains, 4 to 6 weeks worth of gains in 4 to 6 days, okay? Now, this is a play on the spiders, which is the S&P 500. All you got to do is know when to do this. We bought puts on it for $5.32 and sold them for $12. Now, this is a 100-lot trade, so that's a bigger trade. You can see I made $70,000 on this, but we did this same trade in our small account with 3 contracts, okay? And on 3 contracts, it still turns into a 4-figure trade, all right? So again, it doesn't matter what size account you're trading because you can adjust the contract size for that specifically. You just got to know when to do it, right? Okay, so real quick, why listen to me? You probably have no idea, like, who is this guy? I just found him on the internet. So let me give you a little bit of background, and then you can decide, like, okay, this guy knows what he's talking about, or he just started trading yesterday and has no clue. So my background is I would never join the military, but I'm from a military family. So this is me in all these pictures. This is my great-grandfather. He was in World War I. My grandfather, he was in World War II. He was left for dead in Italy and spent a year recovering. Had he not had the fortitude to survive and make it back, I wouldn't be here. And then this is my father. He was in Vietnam. And so I grew up in a disciplined household, and I kind of took the discipline that I learned and then applied it to trading. I am the author of a book called Mastering the Trade. This came out in 2005. Okay, so I've been doing this for a while, and I started trading in 1990. All right, my first trade, I was a senior in high school. So been doing this for a long time. I've made every mistake in the book, so I know what mistakes not to do now and really figure out what works. This book is now on the 3rd edition. And it's a good book on different setups that I use. It doesn't talk specifically about a small account, but it is a good way to kind of get a sense of, trading psychology and different setups and things like that as well. So I mentioned for a couple years, what I did is I was pretty active on the speaker circuit. So this was in Prague. This was in China. I've been on CNBC and Fox a lot. This was in China, signing books. And it was fun, and I met a lot of great people. But then my wife and I started having kids. I'll talk more about that here in a second. I've also done some work with Richard Branson. So this is he and I sitting together at Necker Island. And I help him out with some of his charity stuff. I've also done some analysis for crude oil. And that's just been amazing. An amazing, amazing experience. He's kind of a hero of mine. So what happened then is we had kids. I don't know how that happened, but one day we woke up and we had children. So this is my oldest, James. He was born in 2005, the same year my book came out. This is us in Africa. And at this point, I pulled back from the speaker circuit because, family is super important. My whole goal is I want to be able to raise kids. We homeschool them. We want to raise kids that can think for themselves. I don't care what they end up doing. I want them to, have the best life that they can. And anyway, I throw a lot of crazy philosophies at them. So at the end of the day, though, I love trading. I don't know why I love trading. I just love trading. I love the risk and reward. I love the unknown. And just the whole idea of probabilities and using your mind to create money instead of your back or your hands, right? And that's the part that I like quite a bit. So this is my setup. I like having a standing desk. I don't stand up all the time. I do sit sometimes, but it keeps you moving. Sugar, they always say sugar is bad for you. Well, sitting is bad for you too, and it's important to keep moving around and keep oxygen going to your head. But I like to look at different charts and things like that as well. And I do trade 2 accounts. I do have a large account that I trade. This is one that I trade for income. In fact, I'll show you a live version of that here in a moment. But then I also have a small account that I trade because I want people that have a smaller account to have opportunities and to see the possibilities of being able to grow it. And the fact of the matter is, I can't show them how to do that in a big account because in a big account, you can do trades that you can't do in a small account. What's ironic, though, is that by trading a big account, I learned how to better trade a small account. Okay, and I'll talk more about that here in a little bit. In fact, let me show you real quick. So if we look at my current large account, and I can bring up a live version of this and so you can kind of check it out. This is it right here. So this is my current large account. And you can see I don't win every trade. I lost $8,000 on Pinterest. I made $2,000 on Tesla. And right now I am up $75,000 on Pinterest. So that's my account number. I guess I should block that out. But it's a real account. It's not a demo account. Here's my P&L so far year to date, $700,000. All right, so that's my large account. And then I'm also trading a smaller account. And so on the small account, so far up 18% in 3 weeks, just starting this off. A little bit down today, but we've had some really solid winners. But the goal here is you're actually setting up trades that are for small accounts. So, here's a 2-contract trade at $3.80, right? So hopefully that kind of gives you an idea of at least the kind of stuff that I like to look at. Okay, so let's dive into this. Now, one of the things that I'm known for is that in my live trading room and in public, in one day, I did make $1 million trading Tesla. And that was crazy. And it was just kind of the right place and the right time and the right skill set. Bought a bunch of calls at $6, sold some at $16, held some overnight, and sold them at like $25. And what I did with that was my first $1 million day trade. But I'm a big believer in taking money out of the markets and turning it into experiences, for example, trips, life-changing experiences, but also tangible assets. And my favorite tangible assets are land. Okay, we love this place, and things like gold and stuff like that too. And the reason this is important, now when you've got a small account, your whole small account is your goal is to get it into a big account. But once you have a big account, you want to wire money out and turn it into experiences and tangible assets. What happens is that makes you a better trader. If you don't do that, this just becomes a video game, okay? And if you're playing a video game, you don't take it seriously, and that's when you have big wins and big losses and big wins and big losses. But if you treat it as a business, it can become a steady source of income for you, and also you have the freedom to set your own schedule. You don't have to have a boss. You can do this from anywhere as long as you have a decent internet connection. That's the part that I love, okay? So the proof is in the pudding. Now, here's the thing. I've been doing this a long time. I've blown up 3 accounts really, really hard in the first 8 years I was doing this. And it was heartbreaking. I would go from $10,000 up to about $120,000 trading options. I did this 3 times. Each time it took about 1.5 years. And here's what I would do. What would happen is when I got there, I would do one thing that was smart and then one thing that was stupid. Now, the smart thing I would do is that I would skim it back to $100,000. So I'd take the $20,000 out and I'd put that as a down payment, like say on a duplex or 2 duplexes, okay? And then I'd have the $100,000 and I thought, wow, I took 10K and turned it into 100K. Now I'm gonna take 100K and turn it into $1 million, 10X, 10X. Well, what happened here is that as soon as I did that, I would start losing money and I couldn't figure out what was going on. And it took me years to figure this out. And the last time I did it was devastating because that was money that we were going to use for a down payment on a house. And in fact, I write about the story in my book. I actually had to go get credit cards to cover the down payment because I was too embarrassed to tell my wife. And in fact, she didn't find out about it for like 8 years. So it was really horrible. But what I learned through all this is I came across with some help is that if you focus on the setups, okay, the money takes care of itself. But if you focus on the money, a trader automatically does all of the newbie errors that causes them to lose money. It's ironic, right? So trading is the simplest, most difficult profession on the planet. You've got to understand how to do it, the right mindset, or you're going to be taken advantage of by the markets. The markets are designed to trick human psychology into losing all their money, okay? It's designed for that. The computers are deliberately running stops. The computers are deliberately doing things to juke up people's psychology so that they freak out and they get out at the wrong time. As long as you understand how the game is played, you can play with them instead of against them, and you can make money. All right. It took me a long time to figure that out. So the struggle here, and this is a question I always like to ask people, is who has been struggling growing their trading account or has had trouble making trading work consistently? Okay, so we've all had times when we might have a good day or a good week, but how often have you made a lot of money and then you just gave it all back, all right? And if you develop the right skills as a trader, when you make a lot of money, then you only give a little bit of it back, okay? You recognize the signs. This is a very common thing, and sometimes people run it right into the ground. And it's tough, though. We've got trade wars, we've got tweets, we've got crazy headlines, we've got pandemics. There's always going to be something. And the thing about it is that if you watch the news, they're always going to find something to scare you with. I've got friends that work in the news. They don't care about the accuracy of the news. They only care that a lot of people stick around for the commercials. And the more sensational that they can make it, the more people will stick around. And unfortunately, that brainwashes people into having a kind of like a picture of the world in one way, and then they go and apply that to the market. Like, oh my God, there's so much bad news, this market's going to fall, right? And they go out and buy puts, and the market keeps going up, and they don't understand what's going on. Well, what's going on is you got to pay attention to the market. The headlines don't matter, okay? The headlines do not matter, especially when it comes to trading. So I do think that everyone here, and if you're here, you've got some interest in this, and you might agree that the financial markets are the number one place to create extra income and build wealth without a lot of overhead. Okay. I'm a big fan of real estate. Okay. But putting money into real estate is different. You do have a lot of overhead there. You're going to have a lot of debt. And I love real estate. Don't get me wrong. But, if you're looking for freedom and if there's a huge market turn, suddenly that can become, kind of taxing, right? So, and it can be really illiquid during a downturn. Whereas in a trading account, it doesn't matter if the market's going up or down. You can get out with the click of a button. Okay. And it's a tough situation because, if you could just figure this out and crack this code to growing a small account in any condition. Okay. One thing I got to emphasize here, and I'm going to talk about different market conditions. It doesn't matter if it's a bull market or not. You can make money in any market condition. It does not have to be an up market. Okay. In that case, the world would be your oyster. On the other hand, cracking the code is tough. It took me a long time. I honestly don't even know why I stuck with it. It's frustrating. It's also important to understand what works today may or may not work tomorrow. Okay. That makes trading hard. And it may seem crazy, like why would anyone even be doing this if, things just don't make sense from one day to the next? And so I always ask that because if you've been doing this for a while, I was like, is this ringing true for you? Is this something that you found? And if you found that trading's easy and it doesn't require a lot of work or thought, that's awesome. Keep doing what you're doing. But if you found that it's just like frustrating like that, that's, that was my journey. And I just want to show you some of the things that I've figured out so I don't have to deal with that anymore. So the other question is why small accounts? Look, I like trading big accounts. That was always my dream. It's like, man, how amazing would it be to trade $1 million account? Okay. And at first it was like, how amazing would it be to trade like $100,000 account? And I got to tell you, once you get there, it is amazing because you can do these trades and all of a sudden, you're making $5,000 or $10,000 on a trade. And think about how long, if you're working a job, how long it takes to make $5,000 or $10,000, okay? Or if you have a job, what would an extra $5,000 or $10,000 a month be like, right? And that's the part that gets me excited. Because the reality of the world is that you can be happy with the right mindset no matter what situation you are in. But what I found is that a lot of times my own personal happiness can be tied to cash flow. Like, instead of the car breaking down being an ordeal that causes stress, I can just write a check for it. Because cash flow is there, and it does make life easier. I mean, that's just been my experience. So the other question is that, yes, and I do spend time on a microphone and I like talking about trading and I like sharing my experiences, but I don't necessarily understand how useful the information is unless I get feedback on it. Okay. And when I asked for feedback recently, I've been getting more and more feedback that has a specific theme because people will see us like in our trading room. I'm trading these big accounts, but then they're like, hey, John, look, I've been a gold subscriber for a few years. I've got a small account and I have a request for you. During the years that I've been a gold subscriber, I've never been able to show a profit. And the problem is that I can't take those high cost trades that you do with a 10K account. The most recent example is that stock DATA. I had to pass on that because the option price was too high, yet you were able to make a lot of money in that in your large account. So I'm asking you, would you consider setting up a small account so you could find opportunities specifically in a small account and share those strategies with us? All right. And so that was, when I got that, I was like, you know what? That is, if I'm truly doing this to kind of help people out, then, that's kind of like most people out there are trading smaller accounts, and it would be a great service to show people everything that you've learned in doing this over 30 years and helping them to filter through all the BS and apply that knowledge to their small account so they too can reach that next level. I was like, all right, that sounds, for me, it's something like I understand the freedom that comes from trading. To me, it's like a moral duty to allow people to escape corporate America, right? To escape whatever prison that they're in so they can actually have more freedom with that. And I've just found that freedom equates to cash flow. And for me, cash flow without having a boss and being able to do it from anywhere and work on my own schedule is what makes the most sense, and doing something that I enjoy. So finally it hit me between the eyes. And again, while I enjoy talking about the markets and showing what I'm doing in my regular accounts, at the end of the day, the reality is that a lot of people have got smaller accounts and they need the most help. Okay. And since I'm not a fan of teaching by theory, it's really easy to teach by PowerPoint in hindsight, right? I feel that the best way to teach is based on actual experience, all right? So I opened up a small account and started doing trades and just showing people what was possible. So here is a screenshot as an example. So this is a small account, started off with $5,937, and at the end of the month was at $11,935, up 101%. All right, now I want to be clear here. I am not saying that you can take $5,000 and turn it into $1 million in 30 days. Okay, that's called BS. But think about that. If you could generate, say, 20% to 30% or more, or 100% a month for 10 months in a row, okay, on average, all of a sudden, this can grow into something fairly sizable. You can have $100,000 account, okay, after doing this for a little while. So that's what I'm talking about there. And the main thing there is you can't have big losses. So you got to position size correctly, and you can't be afraid to take small losses. A lot of times people get hung up like, oh my God, I don't want to take a loss because, whatever, we all have hangups from childhood, right? And so all that, whatever shame and trauma we have stored from childhood comes out in trading. Oh my God, if I take this loss and again, I've learned to work through that. And the job of a trader is recognizing when something isn't working and cutting it loose. All right. It's not about, I had 8 trades and I had 8 winners. No, I had 20 trades. I had 8 winners. I had, 7 scratches because they weren't working, and then 3 losses or whatever. That was probably the wrong math, but that's the idea. So, and then from there, the small account continued to grow. At this point, $16,000. So it's a gain of 41% in 6 weeks. All right. So steadily moving higher and higher and higher. And again, you can see here that you're not making money on every trade. On this one, I was up $300, but on this one, I'm down $285. On this one, I'm down $79. On this one, I'm up $250. On this one, I was up $950. And on this one, I was down $54. But net. So you're setting up a portfolio where if the market opens up or down, you're okay. You don't want to bet the farm on an up move. You don't want to bet the farm on a down move, because what happens if you're wrong? And guess what? A lot of times in trading, it's learning what to do when the markets don't do what you think, because the markets aren't going to do what you think a lot of the time. And it's just being prepared for that. And in this case, ended the next month just under 20K. All right. So again, in just 2 months, 5K to 20K by doing these strategies. Now, in this case, if you're not familiar with this is just called a put credit spread. It's a slightly more advanced option strategy, but it does have limited risk. Okay, I don't do naked options or anything like that. It's a limited risk where, in this case, you're selling it at 4 and you buy it back cheaper, and that's your profit. Don't worry if you don't understand that. It's a very, very effective technique. I'm a big fan too of just buying a call if you think it's going to go higher, buying a put if you think it's going to go lower. But you got to know which ones to buy. Okay, and you got to know the expiration of them. All right, or otherwise, you're going to get hosed really bad. But then you also want to understand some slightly more advanced strategies, because there's definitely some edge you can get by doing that. And then again, just kind of going back, this kind of shows the trajectory from $5,000 up to $25,000. And again, not every trade works out, right? But the secret is containing your losses so that when you do have some winners, you can get new equity highs in place. That's what we're going for. New equity highs, new equity highs, new equity highs. Think of this as a stock. So I heard this astounding thing about Microsoft. Microsoft, in its lifetime, has made something like 1,450 new all-time highs throughout its lifetime. Think about that. Microsoft comes up, it consolidates, it's done that 1,450 times. And today it's like a $1 trillion company. But you want to think of your account balance like that too. How many new equity highs can you make? And the key with that is you've got to keep the losses small. Because if you drop down too much, if you go from 20,000 all the way to 5,000, it's hard to get back all the way to 20,000. You can't do that in a couple of trades, okay? And then the other thing to keep in mind too is that there's a lot of people who are really good at making money in a bull market, okay? It doesn't take a genius to, buy the dip and sell, right? The real question is do you know how to recognize when a market's about to tank? Here the spiders go from $300 all the way down to $277. Now, in this case, most people get wiped out if they're not familiar with this. But what I want you to see here is that my equity curve on my P&L went up during this time. There were some trades that were losing money, but I recognized that it was time to have trades in place in case the market tanked. And now I benefited from that. And that's a huge, huge, huge part of that. And you can see this is a screenshot from that particular day. So I've got puts on the SPX, okay? I've got puts on the spiders. I've got puts on the Qs. What else is going on here? Oh, some S&Ps and stuff like that too. And so I was positioned for this. And, for me, frankly, it's not surprising when the markets go down because I've got specific signals that I look for. And it's not looking at the news. All right, so how do we do all this? Like, what is the secret to being able to do this consistently in any market? Well, the first thing is you got to kind of start with the basics. And the basics is that there are 4 market phasers, it's like Star Trek, 4 market phases that every trader must know. And if you're not aware of this, you are trading behind the 8 ball so bad. So either we are in a period of accumulation, okay, or we're in an advancing market, or we've got a period of distribution, or we're in a declining market. Now, most of the time, this is obvious in hindsight, okay? You look back and say, oh my gosh, that was a decline. But you've got to, 2 things. You got to recognize what you're in when you're in it, and you've got to recognize when it shifts. In a market like this, if you're buying stock and buying calls, it gets frustrating because nothing's happening and you're going to lose money. So you got to know how to trade this. You got to know how to identify this. You got to know how to trade it. And then when you get an advancing market like this, which only happens about 20% of the time, you've got to pounce. All right. First of all, don't short it. It's like, oh my God, it's too high. I got to short it. This is a good time to make some money on some long calls. But then you want to recognize when it's quieting down and the institutions are dumping. Okay. Here, if you're buying calls, hoping for a breakout, you're going to get wiped out. All right. There's a specific strategy for distribution, and there's a way to identify it while it's happening. And then last but not least, you got to understand the potential for a declining market. I love declining markets. You can make more money faster than any other time when there's a declining market. But 2 things. 1, you've got to recognize it. And 2, just because you're bearish doesn't mean that the market's going to go down. All right. You can have all the bad news in the world and you can have a market going up. You got to know how to read the markets. And that means ignoring the news because the news doesn't know what's going on. They have no clue. They're like $35,000 a year journalists right out of college reading scripts. They don't know what's going on. Okay. So it's important to keep in mind. No offense to any journalists. It's a noble profession. But I'm just saying is that if you're relying on them for your financial salvation, you are looking in the wrong spot. Okay. So recognizing and adapting to these phases. So again, not to get too much into this, but I always like to show hey, this is where I'm getting this from. Richard Wyckoff was an early pioneer in technical analysis, and he's considered one of the 5 titans along with Dow, Gann, Elliott, and Merrill. So his strategy was simple: determine the present condition and probable future trend of the market, and then select the stocks and strategies that are in harmony with the current market condition. Okay, so that's really key here. Identify the current market condition and then match those with the strategies that best fit that market condition. Buying the dip works great in certain market conditions, and in other market conditions, it will destroy you. Okay, determine a stock's readiness to move. This is important because there's a lot of stocks that'll just languish there for weeks or months or years, and you're going to waste money if you buy them. You want to be able to identify tipping points where a stock's about to pop or about to implode. That's when you want to get in. Otherwise, it's dead money. And then you also want to time your trade with a turn of the indexes. Because if the indexes are going higher, guess what? 85% of stocks are going higher. If the indexes are going lower, 85% of stocks are going lower. So you don't want to fight the indexes. There's always stocks doing their own thing, which I like as well. I call those honey badgers. Honey badgers don't care what else is going on. And it's important to recognize those as well. So the key point here is that one setup will not work for all market phases. Okay. Remember, there's 4 market conditions: accumulation, advancing, distribution, and declining. And each market condition has specific strategies that work best for that specific environment. This means that the same reliable setup that works in one phase won't necessarily work great in a different phase and typically will not. Okay. typically will not. So you got to understand when to change your strategy. Otherwise, what'll happen is if someone has one strategy over the course of a year, they're like, man, those 3 months were amazing, and then I gave it all back. Well, it's because they only have one strategy, and they don't know how to recognize the markets. So my struggle with all this, and this was back in 2010, I like to sit on a balance ball sometimes, got to keep the core strong, is I struggled for 8 years to get consistent. Okay, I already talked about those 3 accounts that I blew up. I almost threw in the towel because I'm thinking, what is this going to do to my family? At the time I was, as I got married, we didn't have kids yet. And I was working a corporate job. And my goal and my dream was to get out of corporate America and just trade. Now, in my corporate job, I was making about $100,000 a year. I had worked myself up to director of operations. I was a good employee. And it wasn't like I hated my work. It's just that it was kind of boring. I thought there was something more that I could do. So I needed to be able to replace that income from trading, which meant I needed to be able to make about $8,300 a month consistently in my trading. And again, it took me a long time to kind of get to that point and to kind of figure it out. But once I learned to identify which market phase we were transitioning into, and I combined that with specific setups best for that market phase, this game absolutely changed for me. Now I look back and I realize that those 8 years of struggle was worth it. But I got to tell you, when I was living it, it absolutely sucked. It was horrible. Psychologically, I think it really impacts people, and you've got to learn to suck it up and let that stuff go. It will test every ounce of self-esteem that you have. But the best thing you can do is, if you've been struggling, is that you got to let go of that baggage. You got to let go of that, man, I'm down the whole $100,000. I got to make that back. You got to let that go. And I promise you, just think of that as research. Think of that as R&D, and give yourself a clean slate. Wipe it clean. Going forward, act like a professional trader. Don't worry about all the mistakes you made. Don't worry about all that money you've lost. I promise you, now that you've gone through it, it'll make you better, but you've got to let go of the baggage of that ball and chain. Okay, because if every trade you take, you're like, I got to make back that money, it's not going to work. All right, give yourself the gift of a clean slate. Forgive yourself and move on. It's so important. So these market phases, generally I am looking at a little bit bigger time frames, like daily charts. And because, especially with a $10,000 account, there's obviously a pattern day trading rule, right? So if you've got less than 25K, you can't day trade. So this is a 30-minute chart, but I want to emphasize that in my small account, I'm not doing day trades. My average trades are for about 3 days to about 3 weeks. That's kind of a sweet spot. Sometimes I'll do longer, but this is an example on a 30-minute chart. You can see that the 4 market phases are here. You've got accumulation, you've got advancing, you've got distribution, you've got declining, and this all happens in the course of about a week. Okay, this whole cycle happens on all time frames. It happens on daily charts. It takes longer to play out. It happens on weekly charts. It takes longer to play out, right? And so you just want to be able to identify those. All right, so what's the opportunity now? What's going on in the markets? So today, the markets are harder than when I started, especially when you throw in the Fed. You got the algos, you got the black box systems in the mix. When I started, there was pits, right? There was a lot of humans involved. Now it's 75% computers. If you don't know how to play their game, they will strip you of all your cash. But once you learn how the algos work, they're an opportunity. Okay, so one of my favorite trades is what I call the algo flush. What's an algo flush? A market goes up, 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 up. It gets people long, and then it flushes down in the search for liquidity. Okay, what is the biggest source of liquidity? It's retail stop loss orders, because everybody reads the same book. If you buy it here and there's support here, put all your stops there. The computers will push the markets down and flush it. Guess what? You want to be able to identify when that can happen, and then you want to be down here buying, not getting stopped out. One of my favorite trades, okay? So that's an example there. So what I'm going to be talking about next is not theoretical. It's what I really do in the markets, okay? I'm not talking about what worked 10 years ago. I'm talking about what's working right now in any market condition, because you've got to identify what phase of the market we're in and be able to apply those strategies towards that condition, all right? So here's the stuff I want to show you. And a lot of times when I talk to people about the markets, they're just like, please help me. do I buy Tesla here and just forget about it? Or do I buy an index fund? I'm worried, the market's going to go down. What about the global economy? All that stuff. So how do you adjust to all this? So the problem is that when one market phase is persistent for a long period of time, many traders don't know how to adapt to the other three conditions, okay? Literally what happens is, as a trader, we get conditioned to trade in a way that works. And so let's say over 3 months, whatever you're doing, you're buying the dip, you're making a lot of money, and now you're conditioned, your human brain is conditioned to only see that, to only do that, to not consider that the market may be changing. And typically by the time most traders realize it, is they give up all their money of the last 3 months, and that forces them to rethink their strategy. That is not what I want to happen to you. I want you to be able to adjust on the fly, okay? Also, I want you to know that at any given time, there are 3 positions that you can have, okay? You can be long, which is betting that the market's going to go up. You can be short, which is betting that the market's going to go down, but you can also be in cash. And I got to say, cash is one of the best positions to be in about 60% of the time. As a trader, you want to be like a cat. And I'm not talking about day trading. I'm talking about these 3-day to 3-week positions. It's like a cat. My drawing skills are horrible, by the way. They peaked in 2nd grade, but imagine that this is a cat. I think this was in the movie Cats. Imagine this is a cat, and as a trader, you want to be the cat looking at the bird feeder on the, and there's a bunch of birds hanging out, and you're just waiting for the one bird that kind of stops paying attention. And then you want to run over, you want to pounce, you want to grab your meal, digest it, and then come back and wait again. That's really what we're looking here in trading. We're not about, we just want to be invested in the market. No. Yeah, I get it. Warren Buffett is a genius, and what he's doing is he'll buy something like American Express, right? And he's going to hold it forever. And that's great. And he's going to make, 15, 20% a year, and he's going to make a lot of money. And if you want to make 15 or 20% a year, that's what you do. But I'm talking about accelerating that. And the stuff that you can do in a small account, Warren Buffett can't do because there's not enough liquidity. In a small account, you can make a higher percentage return than any other opportunity. In a $1 billion account, you cannot go into the options market and buy a bunch of options and get in and out of them quickly. And as a small account, you can. So believe it or not, having a small account, there's an edge in being able to grow an account quickly. It's something that you can't do in any other venue there. Hedge funds can't do it. That's why they're happy making 15% a year. So the key with all this is to identify as early as possible which of the 4 market phases we are in right now. And if you can figure out how to read and notice the change from accumulation to acceleration to distribution to declining, you can flow in and out of the appropriate setups for each market phase. Okay? Knowing this can bring you freedom and confidence faster than anything else I can show you. Consistent success is so much easier when you trade with strategies that match the current market phase. There's a ton of profits and income potential in just cracking that code. So, an example. So, now, I don't really care what stock I'm playing. This example happens to be in a stock called Beyond Meat. So, this is an example of, again, there's a lot of hype and news around Beyond Meat, and I don't care about that. I just want to recognize those 4 setups. Is it in accumulation? Is it in distribution? Is it in declining? Is it in acceleration? Okay, so I have specific strategies for when a stock is in accumulation. Okay, so in accumulation, when it's in accumulation, remember, it's just kind of trading sideways, right? It's not going up yet. And so I will do specific option strategies that benefit from accumulation. So the stock's not really going up. It's not really going, it's not trending higher. It's not trending lower. It's being accumulated. The beauty of options is you can do strategies that benefit from that. Okay. So that's how you can, again, you just gotta, these are not positions that I would take in an accelerating market or a declining market, but in an accumulation market, absolutely. So those are my accumulation bets. Okay. Then what about soft bets? Well, when it starts to show signs of accumulation, great. I'm going to take slightly different bets and then be able to benefit for when it starts to turn. Okay. So this, again, it's going to be a different series of trades in that situation. And then when acceleration goes, it's going to be different again. So if they're straight on acceleration, great, I'm going to buy some calls. And a lot of times that's the biggest bang for the buck. But what happens is a lot of times people piddle away their chips doing these aggressive strategies during accumulation. Okay. And then they lose a bunch of money. And then by the time the market turns, all the money they make simply replaces the money that they lost instead of doing what? Instead of making new equity highs. Okay. That's the goal. You want to make new equity highs, meaning you want your balance to continue to increase. You don't want to recover. You don't want to, oh my God, I lost, $10,000 on a $20,000 account. I got to recover that. No. If you make a good trade, that should be driving your account to new highs, not replacing all the money that you just lost because you're replacing the wrong strategy in the wrong environment. Okay. So there's different tools. These are all tools that some of these you can get on your platforms. Some of these that we have, but I'm always happy to share these because they're helpful for everybody. But this is an example of what I'm looking at when I'm doing stuff like that. Now, this is a moving average here that when it's green, it basically tells you that there's accumulation. Okay. If it's gray, it tells you that it's either if it's green, it's acceleration. If it's gray, it's accumulation or distribution. And then if it's red, you're turning into declining. So one of the things with this and something like this, and it's just, a basic volume weighted moving average, is that you're always on the right side of things. Okay. So if I see green, great, I'm going to get more aggressive. But after some green, if it goes gray, it's like, okay, now we're starting to get some distribution, right? I need to change strategies. And if it turns red, it's a sign that this thing's about to roll over and die. So something as simple as that can keep you on the right side of the market because it's taking into account, not the news, right? It's taking into account what's happening on this particular stock, right? And then, these are things that I like to look at what other markets are doing as well. For example, XLY as a sector, if it's green, that means it's under accumulation, right? And XLB in this case, materials, was being sold off. So I kind of like to see that too, just to get a cleaner picture of what's going on. Okay, so that's the 4 phases on key indexes and sectors. Now from here, we must remember that the markets and individual stocks do not operate in a vacuum. There are other indexes and sectors that often work as leading indicators. For example, the New York Stock Exchange and the transports typically start a key move well before the S&P 500. Okay, so let's take a look at this. So now this is kind of an eyesore, right? So we found some ways to kind of clean this up and make it a little bit simpler to follow. But here's the S&P 500. You can see it's red. So in this particular case, we've got a declining market in the S&P 500. We've got a declining market in the New York Stock Exchange, but the semis are green. Okay, so you can have mixed bags like this where maybe the S&P 500 is declining, but the semis are going higher. Okay, and so it's important to understand the sectors as well to kind of see what's going on. And then what we like to use is instead of looking at all 18 of those charts, we just have a tool that we can look at and get a sense, like a snapshot of what's going on. So, yes, S&P 500 isn't declining, but the Qs are under accumulation. So that's kind of weird, right? But again, in that kind of a case, yeah, I'll buy puts on the spiders and I could buy calls on the Qs or whatever the strategy is appropriate for that. But it's important to be able to identify what phase the market it is. So you don't have to guess, right? Guessing is horrible. You want to have an edge. I always say, like, if you're going to Las Vegas, okay, so what is an edge? If you go to Las Vegas and you can count cards, and let's say that you got a high card count, which means that there's a 75% probability of getting a blackjack. Well, and you're betting $100 a hand. Well, if you lose 2 hands in a row and there's still a 75% probability, what are you going to do? You're going to keep on betting because over the course of 10 hands, you're going to win 6 to 8 times. And that's the whole idea with this. So when I see something like this, I know that it's like, okay, well, maybe I'll buy a call on the semiconductors, but I really want to focus on the red here because there's a lot of red and we want to make sure that we're not ignoring that, okay? So from there, what are some specific strategies on that? So here's an example on the XLF. So XLF, for those of you that don't know, XLF is the financial sector, and it's always a fairly important sector to monitor. So what we look at here, and these are, I'll talk more about these in a second, but these are things that we use to help determine, again, the nature of the market, what phase is it in, but also kind of where to get out and where to put our stops. But once it cracks this, we buy the puts, In this case for $1.44. And then once we blow through this ATR level, we get out. Now that was good for a 42% profit in 4 trading days. Okay. Bottom at $1.44, sell them at $2.05. You can make a living doing that. Here's another example. And again, and the reason I'm pointing this out is because it's like a lot of people get lulled into the complacency of a nice up market and they're totally caught off guard. So all the money that they made over 4 to 6 weeks is gone, right? That's not what we want to happen. We want to be able to recognize when we're going into declining. In this case, we bought puts for $4.50, sold them at $9, $100% profit in just 4 days. Without that, had we been long this whole time, we would have lost all of the gains of the prior 4 to 6 weeks. And guess what? Instead of making a new equity all-time high, we would have gotten crushed. The goal with this is to not think, it doesn't matter what the market's going to do next. You want to find out what's going on, yes, but your goal with this is to manage your account balance, your net liquidating value. That's the only thing that matters. And it makes it easier. You're not worried about being right. You're not worried about calling the market correctly. You're just focused on making money. There's a saying that I love. It's, would you rather be right or would you rather make money? Okay, a lot of times people get caught up psychologically in that whole idea of wanting to be right. And it's a disaster. Okay, let go of the need to be right and just focus on making the money. Okay, all right, SMH, again, same thing. We got the signal. We came down 45% profit in a couple of days. So a lot of people got hurt during this time because they were not paying attention to how the markets worked. We were able to take advantage of that opportunity for new all-time highs in our equity. All right, same thing here with the spiders. Again, different strategies there as well. Okay, so what else? This is an example of a trade that I like to look at, a transition from accumulation to acceleration. So we have a squeeze here. This is Roku. We've had a nice little pop. Again, here's another squeeze here. It's one of my favorite signals. And after some accumulation, we're looking for the next signal here, right? Notice here that this moving average turned gray. That's telling us that there's accumulation. Gray after green is accumulation. We want to hold that support. And then we get a buy signal here, break above the high, the low bar on this. Boom, we load up on calls and we get the pop. That's what I'm talking about. Instead of sitting here for weeks wondering what's going to happen, looking for specific opportunities, looking for specific signals, okay? Eliminating analysis paralysis. So with Roku, we were able to pounce on this. We bought calls at $4.35, flipped them out for $10.62. It was good for $6,250, okay? It was a return of 144% in 5 days. So that's what I mean when I talk about, oh my gosh, I want to make 20% a year. That's great, and that's appropriate for people if you're retired and you just want something steady. You don't want to be spending a ton of time worrying about it. That's great. But if you know what to look for and you're just patient and you don't piddle away your capital on stupid trades, okay? And by stupid trades, what I mean is trades where the algos trick you into taking action. Okay, the markets are very good. They're designed to trick you into taking action. That's what you want to avoid. But if you learn to be patient and to wait and to know what's going on in the market and then the appropriate setup for that market and then the trigger to get in, so you're getting in when the action starts and not sitting there, just waiting, that's what can happen. So I'd rather you be patient like the cat sitting there watching the birds. Look for that one bird that's not paying attention. Pounce on that bird, chomp it down, and then go back to flat and wait for the next setup. All right? All right. Netflix. So Netflix in declining mode, okay? The market's in declining mode. So if you get a rally in declining mode, you are not going to buy the dip. No buying the dip. You got to understand that strategy. So in this case, what we're doing is instead of buying the dip, is we're doing a bearish bet, okay? So this is a bearish bet. We sold calls. And again, don't worry if you don't understand this terminology. With the idea that, hey, if the market's going to go down, the calls are going to lose money. So, and we never do anything naked. Everything's covered. It's defined risk. So we sold this for $1.56, which for 10 contracts is $1,560. And we were able to buy it back for $110, which means that our profit on that is $1,450. This is one of my favorite things to do with options, because what's happening is most people are doing the exact opposite. They see that Netflix is going up again, so they buy these calls at $3.81 and they lose all their money. We are on the other side of that trade. We're now the market makers, okay? And that's important to understand. When you understand the situations where you become the market maker, you are profiting while everybody else is losing money, okay? That's just the nature of trade. So if you're watching the news and you're watching tweets, then what can happen is this kind of price action can drive you nuts, okay? And it's confusing, it's frustrating. It's like it's up one day and it's down the next. And I highly encourage you just to get the right tools. So this is that same move, okay? Same move here. And we can see here that, yeah, we rallied, but guess what? We're in decline mode. And when you rally in decline mode, you don't buy it in the hope that we're going to make new highs. You use this opportunity to make some bets that we're going to continue to the downside, okay? It's important. And here you can see that on this particular day, now I did this one in my large account and small account, but you can see here, I mean, it's like, this is a really good day to make bets to the downside. So, but it wasn't a guess. It was a high probability setup, right? High probability setup. That's what we want. We want those good odds. We want that edge. And an edge is nothing more than the probability of something happening is higher than the probability of something else happening, okay? There's no guarantees in trading. There's only probabilities. And you want to be able to identify those moments in time where you've got a 75% chance or greater of being correct, okay? And then from there, you position size accordingly. And then you know when to cut it loose when it's not working. It's as simple as that. But a lot of times people overcomplicate this, okay? And if you overcomplicate trading, you lose money. So in addition to all this, because I always like to people understand like, oh my God, the market, what is it doing right now? There are key tells in the market that also kind of give you an idea of what's going to happen next, okay? And I want to show some of those with you here. So the first one is called the trend. So the trend is, in most platforms, you got to put in $TRIN, okay? It's a free tool. And this is the only true overbought or oversold reading on the planet. Stochastic, RSI, those are okay. But this is true overbought, true oversold. So when you get a down day like this, and then you get a reading of over 2.0 in the trend, it just means that it's extreme oversold, and the next day you got a 90% chance of a big bounce. Okay? Again, here's all these, 90% chance of a big bounce. On the other hand, if you get the readings here, like at 0.50, odds are very high that we're going to decline. 0.50, odds are very high that we're going to decline. All the stuff in the middle is neutral, so it doesn't give you an edge. That's what I'm talking about in terms of an edge. If you know when to look for this, you get edge, and then you pounce when you have that edge. That's how you do this, okay? The other one I like to do is the 10-day simple moving average of the combined equity and index put-call ratio. Now, again, if you don't understand what that means, it's okay. The short version is that if it's down here, everybody and their mom is long stocks, okay? Now, if everybody is long stocks, there's no one else left to buy, okay? That's how you got to think about it. And then basically stocks fall on their own weight, okay? On the other hand, if we're up here above 1, there's too many people that are nervous, okay? Too many people that are short. And typically at that point, you're looking for a bounce, okay? So again, now we come down. Oh my God, it's the end of the world. Oh, no, it's not. It's a buying opportunity. Boom. Okay. So when we're shorting, we don't short down here, right? We short when this is here and stocks are, what's the right term here? They're just grinding higher, right? It's complacency. That's when you accumulate short positions, because then what will happen is the quote unquote out of the blue move down, you're going to be positioned for it, right? And that's a big important tool that I use in addition to all the other technical stuff that I use. I can't imagine looking at the markets without this information. It's like, what do you do? So some of the things that we do and some of the tools that we've created. and these are included in a course we do, is like all these tabs up here. Okay, so here you can see there's the trend, there's the put call ratio, there's the 10-day moving average of the put call ratio. Okay, as well as some other tools that we like to use like that. So in trading options, the other thing is, here's the other mistake that I've seen a lot of traders make in trading options. And don't get me wrong, it's exciting and sexy and fun to be able to buy an option for $2 and, sell it for $12. Wow, a 6-bagger. I'm a genius. But there are a lot of opportunities where you can make money, say, buying an option at $1,500. So one option at $15 is $1,500, and then flip it out for $1,775, and then you keep that money. Okay, so on a 10-lot trade, that was $2,665. If you did a 1-lot, that would be $265. Okay, that's real money if you're trading a small account. So don't get too caught up in the idea of like, oh, I got to buy these cheap options at $1 is the only way to make money. No, most of the time, believe it or not, these bigger options offer more opportunity. So you got to get rid of the idea of buying I'm buying these options for 50 cents, and if it goes to 10, I can quit my job. That's also the road to the poorhouse right there. Okay. And then also too, if you have a larger account, you can trade stock as well. So this is TTD. And what I look for here is these sweep ups. So there's sweep ups and sweep downs. So you get the sweep down is oftentimes a good entry. And if it's a sweep up, it's a good time to get out. In this case, I was just selling stock. All right. But those are things that we look out for exit signals, because one of the biggest things people ask me is when I get into a position, they're like, what's your target? Now I'm going to tell you something that is probably going to be considered blasphemy by many traders, but having a target is the stupidest thing you'll ever do. Okay. Why is that? Now, I don't mean that. I mean that tongue in cheek, right? Because of course you want to have an idea of where it's going. But the reason I say that is that when we have a target, what happens is we automatically go into confirmation bias mode. Okay. So what is confirmation bias? Confirmation bias is a proven bias. And as an example, say you're at a horse race and there's 10 horses, and you know that any one of the 10 horses could win. But the moment you place the bet, on number 4, at that point, your confirmation bias now has you convinced that that horse is going to win, and you're actually surprised when it doesn't. Okay. It's the same thing with the target. If you've got a specific target in place, let's say that my target on this was 290. And then what happened here is we went up to like 288 and then we got crushed. Okay. And a lot of times what will happen is it comes close to a target and then comes all the way down and stops you out. And I'll hear that all the time. It's like, well, I got close to my target and it didn't fill, and then I got stopped out. Close to your target is fine. So what you want to have is, sure, you can have a target, but be flexible to be able to recognize when something is reversing. Okay. And that's what those other tools are for. So I'm actually not a fan of targets because it creates this confirmation bias. But of course I'll say, in general, I'm looking for it to go into this price zone. But if we go up there and there's a lot of volume, we're going to keep holding. But if we get near and it's starting to run out of gas, we're going to get out early. And that's a huge important edge in trading. Target, stop, and then you step back and see what happens. That's old school. Old school does not work in this market. So the key to consistency. So in order to consistently make money in trading, in order to consistently be making those new equity highs, okay, because if you've got a $10,000 account and you can make 100 new equity highs, you're on your way to a $100,000 account. Simple as that. So you've got to learn how to create steady winners off your trading account. You got to identify which of the market phases we're in right now, okay? And of course, you got to know which setups work best for those various 4 market conditions. And then you got to be willing to switch gears. You got to be willing to rotate through those setups without overthinking it. Because if you overthink it, you're dead. All right. Again, if you're overthinking, it means you're going into confirmation bias. You're trying to justify stuff, and that does not work in trading. The markets are literally designed to take advantage of the human brain and human emotions and human psychology. So overthinking it ain't going to work. So you want to adjust the setups for the market condition. So I love the squeeze. The squeeze is a setup that I'm known for. I love it. and it works great in certain conditions, but it doesn't work great all the time. It works great during transitions from accumulation to acceleration or from distribution to decline. Squeezes are amazing for those transitions. But when the market is in declining mode or acceleration mode, there aren't going to be any squeezes. And if you don't know what a squeeze is basically a compression of the Bollinger Bands, and they get tight. And it's literally a squeeze of volatility. And then when it releases that energy, the stock either explodes higher or declines. Okay. And it's just being able to recognize that. I love them though. So if you like all this, if you like what I've shared, if it's resonating with you, if it's striking a chord, there are many simple ways to stack the odds in your favor if you are trading a small account. Okay. Now I'm going to discuss these principles in detail, as well as these proven technical strategies for each of the 4 market phases that we've already discussed. Okay. Now, if this sounds appealing and you want to take the next step on this small account journey with me, I have got a class where I have detailed all of this out, and we're doing this at a starter price of $297. So basically, for a $297 investment in your future, you can learn everything I've learned over the last 30 years on how to do this. Here's how to identify the phases. Here are the key things that you got to look for. Guess what? You got to look for a key reading on the ADX. You got to look for a key reading on the beta. All right. You want to, all that stuff. It's a checklist. Okay. At the end of this, there's a checklist that says if all this stuff comes into alignment, you are good to go. And that's what's great there. From there, if you want to up it a little bit, in addition, this is what you get. This is all in this. Okay. And again, as you're seeing this, instead of the $1,000 class and you're seeing this, you can do it for $297. Now, from there, if you're thinking like, well, that sounds great, but I am new to options. I don't know what options are. I don't know what the squeeze is either. So for the $697 option, there's a quick start class that gets you up to speed with the basic setups that I like, the squeeze and stuff like that too. That's not, that's just above and beyond those 4 market phases that we were talking about. But there's also an options 101 class. So if you've I've never heard of an option. What are options? Or I'm a little rusty on them. The options 101 class will walk you through it. So you understand, I know what a spread is. Easy enough. But it also comes with 2 live trading days. Okay. These are recordings of where I'm trading the markets live. And you can see, again, I'm a huge fan of putting this stuff into practice. Yes, you can go and anybody can teach by PowerPoint of what happened in the past, but by trading live, you can see how to make decisions in real time. Okay. How do you know it's going to go higher? How do you know it's time to get out? Okay. And if you're looking at a PowerPoint in hindsight, it's easy to see, right? But what about in real time? Okay. When the money's on the line, the pressure is building, what do you do? And so that's super helpful there. And then from there, if you want to go full tilt, this includes the strategy, the quick start, options 101, basically everything that you're getting here. Also, it includes, though, 2 additional trading days that were recorded. And a bonus is the simpler macro deep dive, where every once in a while I'm going to step back and just say, look, on a macro level, here's what's going on in the world. Look for gold to explode. Look for interest rates to do this. The reason I can do this is that I've been in the industry long enough is that I get for free stuff that hedge funds put out that they charge like $50,000 a year for. And there's a lot of good data in there. And so I'll siphon through it. It's not stuff you're going to see on any news show anywhere. Okay. So one question is why purchase now instead of waiting? Okay. Well, the thing with this too is that at least with this introductory price, this is going to be here for a limited time. So we're just like, hey, if you're seeing this and you're into this, and if you've got a small account, we want you to have the opportunity to dive in for the smaller price. Okay. We recognize that if you're trading a smaller account, coming up with $1,000 might be kind of tough, although we'll show you a way to kind of get this with no money down here in a second. So you do want to take advantage of this because it's a limited time offer. And then also too, why put off your dream of getting going on this? This is stuff that's applicable right now. Okay. So that's something to keep in mind. Just kind of going through, there's a couple of other questions here. What is the minimum account size that you'd recommend starting with? Okay, so the model account that I like to use is $10,000, but it doesn't really matter what you use. If you have $1,000 account, if I can write it out right, that's fine. I know a couple of people that I've done this with, they started off with a $500 account. That's fine. You've got to learn somewhere. The beauty of this is that you can develop your trading skills on any size account. Once you have the skills, you'll start growing it. Okay, so that's kind of nice from there. What is considered a small account? And so I always think of a small account as basically less than $25,000, and really between about $500 and $10,000 is kind of a sweet spot. Now, if you have a larger account, say $100,000, you can still use these strategies. It's just geared specifically towards, look, if you got a small account, this is how you're going to get edge. Okay, this is how you're going to get edge in that small account. We've gone through, we've already showed some sample trades, so hopefully that was helpful. You can see hey, here's an option. We bought it at 2, we sold it at 3. And what was the name of the book that I talked about earlier? So my book is called Mastering the Trade, and you can get it on Amazon. Now, the stuff in this class is not in the book. This is all new material, but the book will give you a good foundation of strategies that I've used, like the squeeze, which I love, but also a lot of the psychology that's involved in this as well. Are the class prices one time only? Oh, is this a subscription? Oh, good question. So no, this isn't a subscription. So this isn't $297 a month. It's a $297 flat fee. It's a $697 flat fee. It's a $997 flat fee. Okay. All right. So that's that. And then, so what is the goals of the Small Account Secrets class? So really, at the end of the day, I want to empower you. I want to give you the tools. I want to give you the 30 years of experience that I have so you can discover how to grow a small account quickly, okay? And it's imperative for me that you understand the methodologies that must be utilized to grow a small account quickly, okay? Because if you don't have this stuff, I hate to break it to you, it ain't going to happen. Okay. Again, it took me a long time to figure this out. If you're just starting your journey, do you want to spend 8 years and probably losing hundreds of thousands of dollars figuring this out? Or do you want to say, okay, well, John already did all this. Let's see what he has to say about it. That's the goal with this. I don't want you to go through the pain and suffering that I went through to learn this. I want you to be the benefit of my experience. Okay. And then you got to learn what drives market movement. You can use this knowledge on small accounts starting tomorrow. You've got to know why the markets move. Okay, it's not because of how you think they move. They do not move at all based on, oh my gosh, this news announcement or anything like that. It has nothing to do with that. It's nothing to do with that. So you got to understand what drives the markets. And you got to be able to focus on the key variables. There's a lot of noise out there that's unnecessary. Okay, if you're focusing on the wrong stuff, you're going to get hijacked. You're going to get sideswiped. You're not going to be paying attention to the right things. It's like, again, going back to that cat analogy. If the cat's, trying to catch a bird, but he's watching the butterflies, he's not going to catch a bird. He's going to starve. And it's the same thing in trading. There's so many things out there that distract so many traders, and they prevent people from doing this. And you've got to understand how to filter through all that and what to ignore, what to discount. Okay. If you don't do that, you're just going to get taken advantage of. Okay. You're just going to get taken advantage of. The other thing, and this is super important, it took me a long time to figure this out, is you've got to learn to keep the money you make. Now, there's a saying in trading that one of my mentors told me is basically everybody goes through 3 phases. Okay. First, you lose money. Then you learn how not to lose money. And then and only then, when you learn how not to lose money, then and only then can you make money. Okay. That's what I mean by keeping the money you make. Anybody can make money. Most people give it back. We're going to end that cycle. You're going to make the money and you're going to keep the money. Okay. Keep it. You can do stuff with it. You can take your family on trips. You can buy a ranch, whatever floats your boat, but you got to keep that money. You got to keep it You got to keep those algos from taking it back, because they will. That's what they're trained for. That's what they're written for, is whatever money you make, they're designed to give you that sense of complacency. Maybe even euphoria. Oh my God, I made so much money. They're going to take it right back. They don't care if you made it, because they know they're going to get it back. Stop that cycle. And don't blow it this time. Don't blow it this time. Don't make a lot of money and just give it away. Okay, that's the oldest story in the book. I can't tell you how many people, I ran this account up and then, I pissed it all away. Don't do that. It's not fun. So some of the tools that are included in this class it's basically this dashboard. Okay. So you're going to come away, and this is for Thinkorswim, for those of you that know the platform. I know not everybody uses Thinkorswim. If you use Schwab or something like that, that's fine. The Thinkorswim platform's free, so you could still look at charts there if you wanted to do this. So all these tools up here, this is part of the checklist for whether or not to take the trade. Okay, VWAP, stacked moving averages, the 52-week and 60-day channel, the beta, the ADX. Okay, that's all explained in detail in the class. What readings do they need to be? Why are they important? Okay, because when they're all lined up, this is easy. All right, and it's all right there in front of you. And then this stuff down here gives you a reading of what different sectors are doing. Okay, and then for options trading, there's this thing here that talks about IV. And again, don't worry if you don't, you never even heard about that. Don't worry about that. And then the squeeze, of course. So this is all stuff that's included with the class. You get all these tools as a bonus to help you navigate the minefield known as the markets. Okay. Now, the other thing I mentioned before, that if you wanted to do this with no money down, we do have an option with PayPal that you can go in. It's 0% interest for 6 months. I love this because it gives you the opportunity, for 6 months you can learn. And ideally, you're building up your skills as a trader that you could potentially even pay this from the profits in your trading account, depending, everybody's a different study that way. But again, if you go in for payment method, hit PayPal credit, you get it for nothing now, and you got 6 months before interest starts. So you don't even have to pay it off in 6 months. It's just that you got to start, paying interest. So one question, is this good for newer traders? I've been doing this for 30 years, right? It's like, oh my gosh, he's got so much experience. How can I compete with that? I'm not even going to understand this. This is designed for newer traders. Okay. It's designed for newer traders. My 9-year-old son, Dylan, does some of these strategies so he can make money for Roblox. I give him a chart, I have him look at it, and then he's looking for a signal, and then he'll buy, he'll sit there and okay, I'm going to buy 10 calls on the spiders or 10 puts, and all he's going to do is make $100. All right, because if he gets $100, he can get Roblox. Now it's awesome because he's been able to do it consistently. But so here's the challenge that we're finding is that when he's part of his chores, he's got to make up his bed, and he'll give his sister $5 to go do it for him. He's like, I can make more money trading. So we don't know what kind of habits this is building, but we'll see. I'll let you know in 30 years. These options strategies have fixed limited risk of your choosing. Okay, so there's no surprises. There's no naked options. There's nothing like that. And you don't need to know much or anything about options. Okay, this approach is simple. We're not doing a lot of complicated stuff. And then in my Options 101 series, we show you how to do this. So I've read a lot of option books. 90% of what's in options books, in my opinion, is way too complicated. Way too complicated. You don't need to know the Greeks. Look, it doesn't hurt if you do, don't get me wrong. But for this kind of stuff, simple, simple, simple. You just need to learn the basics. And if someone was asking me, okay, John, I could do either one of these, what do I do? This middle one's a slam dunk because you get the strategy, but then you also get the quick start class, because if you're newer to whatever I do, or you're newer to Simpler, that'll get you up to speed. If you're newer to options, that'll get you up to speed. I really think it's important to see the live trading. It's like if you've never played golf before and your boss says, hey, on Monday, I need you to join our foursome for this charitable golf tournament. And you're like, I've never played before. So over the weekend, you read 3 books on golf, right? Okay. How do you think you're going to do when you walk up to that first tee? You're going to have all that book knowledge, but you're going to have no practical experience swinging a club, and it's going to be a disaster, okay? In golf, you've got to sit there and swing a club with a golf pro so they can say, well, you need to, shove your left shoulder back more and loosen your grip, okay? That's what happens in the live trading. You're seeing stuff happen real time. You're watching me place real trades in a real account, real time, no hindsight crap, okay? And it's just understanding how to do all that. So that's what we got there. And, this is something where, I'm very passionate about it. Look, I teach my kids this. Like, this is the same stuff I'm teaching my kids. If they get the trading bug and they want to be able to escape corporate America one day, or I don't know what they're going to do. They're 14, 12, and almost 10. I don't know what they're interested in. But if I at least show them these trading skills, that will at least give them an avenue, right? They may be passionate about it, maybe not, but at least they'll have a skill set that they can use at any time in their life, which I think is great. All right. So I hope you're as excited about this as I am. This was, again, it's 30 years of work, 30 years of knowledge that's packaged up with checklists. It's easy to understand, and it's designed to get you up to speed so you can start doing this tomorrow. All right. So anyway, that's what I got. Thank you guys for joining me. You guys have a fantastic rest of the day. Have a great week. Have a great month. Have a great year. And I look forward to any feedback that you have for me on this class and any questions you might have. All right? Have a good one.